If you're on Social Security or disability benefits, you might think President Trump's promised $2,000 stimulus check is the biggest news for next year. But I'm here to tell you it's not even close. There are 7 major changes coming to Social Security and disability starting in just a few weeks that are going to directly impact your monthly check. And here's what concerns me. Some of these changes require you to take action right now, or you could see your benefits delayed or even stopped completely. Plus, there's a piece of legislation moving through Congress that could put way more money in your pocket than any stimulus check, and almost nobody is talking about it. So if you're living on Social Security Retirement, SSDI, or SSI, you need to pay attention to every word in this video. My name is Tony, and I'm a government benefits expert. For 9 months, I've been helping seniors and people with disabilities navigate the Social Security system and get the retirement and disability benefits they've earned. I create content on Social Security, Medicare, Medicaid, food stamps, and other topics that directly affect your finances and your retirement. If you're new here, welcome. I'm genuinely glad you found this channel. Do me a favor and drop a comment letting me know what city and state you're watching from. And if you've been following me for a while, welcome back. Thank you for your continuous support. I really appreciate you being here. All right, we've got a lot to cover today. So here's how we're breaking this down. First, I'm going to tell you about a major change that already happened that's causing thousands of people to lose their checks right now and how to fix it immediately. Second, we're covering all 7 changes coming in 2026 that affect your benefits. And third, I'm going to share the legislation that could boost your Social Security by $2,400 a year permanently. This is critical information, so if it helps you, please hit that subscribe button and ring the notification bell. Let's make sure this reaches everyone who needs it. Okay, first things first, this is urgent. If you're still receiving your Social Security or disability benefits by paper check, your payments may have already stopped. And every single day, I'm getting comments from panicked viewers saying their benefits disappeared and they don't know why. This is happening all across the country, and the stress it's causing people is absolutely heartbreaking. Here's what happened. Earlier this year, the federal government issued an executive order stopping all paper checks for Social Security and disability benefits. They sent notices to the 5 million people still getting paper checks, giving them until September 30th to switch to electronic payments. But a lot of people either didn't get that notice, didn't understand it, or didn't think it was serious, and now their benefits have stopped completely. If this is you, don't panic. You can fix this today. Here's exactly what you need to do. Go to the website, godirect.gov. I'm putting it in the description. When you get there, you'll see 2 options. Option 1, sign up for direct deposit to a bank account or credit union. Option 2, get a Direct Express debit card, which is a prepaid card backed by the U.S. government, specifically designed for federal benefit payments. Both options work. Pick whichever one makes sense for you. If you have a bank account, go with direct deposit. If you don't have a bank or prefer not to use one, the Direct Express card is perfect. It's free, secure, and accepted everywhere debit cards are accepted. This isn't optional anymore. Paper checks for federal benefits are done. So if you haven't made the switch, go to godirect.gov today and get this handled. Your benefits depend on it. Now let's talk about the big, beautiful bill and the tax deduction for seniors, because this is huge. But it comes with some serious fine print. Starting in 2026, seniors are getting a new $6,000 tax deduction on top of the standard deduction and the existing senior deduction. Sounds great, right? And for some of you, it absolutely is. But here's the catch that nobody's talking about. You have to make enough money to actually use this deduction. Let me break down the math for you. If you're a single senior, you already get the standard deduction of $15,750, plus the senior deduction of $2,000. Now add this new $6,000 deduction. That's a total of $23,750 in deductions. But, and this is critical, you have to have more than $23,750 in taxable income to benefit from this. If you're making less than that, this new deduction does absolutely nothing for you because you're not paying federal income taxes anyway. For couples where one spouse is under 65, you need to make more than $39,100. If both of you are 65 or older, you need to make more than $46,700 combined. If you do qualify, it's going to save you real money on your taxes. But if you're living primarily on Social Security, which is most seniors, this doesn't help you at all. And that's why the legislation I'm going to tell you about later is so much more important for everyday Americans. That bill actually puts money directly in your pocket, not just reduces taxes you might not even be paying. All right, now let's get into the 7 specific changes happening to Social Security and disability benefits in 2026. Some of these you might know, but I guarantee there are a few that are going to surprise you, and some of them require action on your part. Change 1. The 2026 COLA increase. First up, the cost of living adjustment, or COLA, for 2026. And I'm going to be straight with you, it's disappointing. Social Security retirement benefits are going up by 2.8%, which translates to an average increase of $56 per month. If you're on SSDI, Social Security Disability Insurance, your average increase is $44 per month. For SSI recipients, the maximum benefit is going up by just $27 for individuals and $41 for couples. Is this life-changing? No. Is it even keeping up with your actual expenses? Probably not. A lot of seniors were expecting something much bigger given the inflation environment we've been living in. Groceries are still expensive, utilities are up, housing costs keep climbing, and yet we're getting a 2.8% bump. This is exactly why President Trump's $2,000 stimulus promise got so much attention. People are struggling, and this COLA increase just doesn't cut it. But stick with me, because the legislation I'm going to tell you about later could actually make a meaningful difference in your monthly income, not just a one-time payment. Change 2, maximum benefit amounts. Second change, if you're retiring at your full retirement age in 2026 and you've paid the maximum into Social Security throughout your career, the highest benefit you can receive is $4,152 per month, or $49,824 per year. Now, most people aren't getting anywhere near that amount. It requires you to have earned the maximum taxable amount for 35 years of work, but it's good to know what the ceiling is. The reality for most retirees is somewhere around $1,900 to $2,000 per month, which is why maximizing every dollar and taking advantage of every program becomes so critical. When you're living on that kind of fixed income, every opportunity to increase your benefits matters significantly. Change 3, payroll tax wage base. Third change, the payroll tax wage base is going up. In 2026, you'll pay Social Security taxes on income up to $184,500. Anything you earn above that isn't subject to Social Security tax. This matters if you're still working or if you have income from a side business. If you're earning wages, you're paying 6.2% to Social Security up to that limit. If you're self-employed, you're paying the full 12.4%. For most people watching this video, this doesn't directly impact you since the average income is well below that threshold, but it's part of how the system stays funded. So it's worth understanding how the broader system works. Change 4, SSDI earnings limits. Critical. Change number 4 is critical if you're on disability benefits. Pay close attention to this because I see people get into serious trouble with this all the time. If you're on SSDI and you're working or thinking about working, there are income limits you cannot exceed without risking your benefits. This is called substantial gainful activity, or SGA. In 2026, if you're blind, you can earn up to $2,830 per month without impacting your disability benefits. If you're non-blind, the limit is $1,690 per month. You must report this income monthly. If you go over these limits and don't report it, Social Security will review your case and potentially reduce or cancel your benefits. Even worse, if they determine you were overpaid because you earned too much, you'll have to pay that money back. And I've seen people get hit with overpayment notices for tens of thousands of dollars. It's devastating, and it's completely avoidable if you just follow the rules. There's also something called the trial work period, which allows you to earn up to $1,210 per month while testing your ability to work without immediately losing benefits. This gives you a window to see if you can handle working again without losing your safety net right away. But here's my advice. If you're on disability and you're thinking about working, contact Social Security first and make sure you understand exactly how your earnings will affect your benefits. Don't guess. Don't assume. Get it in writing. Call them. Go to your local office. Document everything. This is too important to leave to chance. Change 5. Medicare premium increase. Important. Change number 5 is going to make you angry. And honestly, it makes me angry too. The Medicare Part B premium is increasing by $26 per month, a 10% jump. Your new premium in 2026 will be $200.90 per month, up from $174.70. Now, let me ask you something. The government just told us that inflation is under control, and that's why we're only getting a 2.8% COLA increase on Social Security, but then they turn around and hit us with a 10% increase on Medicare premiums. Which is it? Is inflation low or not? You can't tell seniors that their Social Security is only going up 2.8% because inflation is minimal, and then in the same breath, say medical costs have skyrocketed so much that Medicare premiums need to jump 10%. The math doesn't add up, and frankly, it feels like seniors are getting the short end of the stick on both sides. And here's the real kicker. Medicare Part B premiums are automatically deducted from your Social Security check, so you're getting a $56 increase from COLA, but you're immediately losing $26 of it to Medicare. Your actual increase is only $30 per month. For a lot of seniors, this Medicare hike is going to eat up more than half of their COLA increase. That's why I say the 2.8% bump is basically meaningless for most people. It's insulting, honestly. You worked your whole life, you paid into the system, and this is what you get. A net increase of $30 a month while everything around you costs more? Change. 6. Earnings limits for early retirees. Change number 6 affects people who are collecting Social Security retirement benefits but are still working and haven't reached full retirement age yet. If you're under your full retirement age for all of 2026, you can earn up to $24,480 or $2,040 per month without having your Social Security benefits reduced. If you earn more than that, Social Security will deduct $1 from your benefits for every $2 you earn above the limit. So if you earn $30,000 and the limit is $24,480, that's $5,520 over the limit. They'll reduce your benefits by $2,760 for the year. That's real money coming out of your pocket. Now, if you're reaching your full retirement age during 2026, different rules apply. In the months before you hit full retirement age, you can earn up to $65,160 or $5,430 per month without penalty. Above that, they deduct $1 for every $3 you earn over the limit. But here's the good news. Once you reach your full retirement age, all earnings limits disappear. You can earn as much as you want from working, and Social Security won't touch your benefits. No reductions, no penalties. Work as much as you want, make as much as you can, and your Social Security stays intact. This is confusing for a lot of people, so let me simplify it. If you're already at full retirement age or older, work as much as you want. If you're younger than full retirement age and collecting benefits, watch your earnings carefully and track every dollar. Change 7, full retirement age at 67, and finally change number 7. The full retirement age is now permanently 67 years old for anyone born in 1960 or later. This has been gradually increasing since 1983 when Congress passed a law to push the retirement age from 65 to 67. They've been phasing it in slowly, and as of 2026, we've hit the final destination. 67 is the new full retirement age. Why does this matter? Because if you claim Social Security before your full retirement age, your benefits are permanently reduced. If you claim at 62, you're looking at a 30% reduction that stays with you for life. That's not a temporary cut. That's forever. If you wait until 70, you get delayed retirement credits that increase your benefit by 8% per year. The decision of when to claim is one of the biggest financial choices you'll ever make, and it's now based on that age 67 benchmark. This affects your lifetime earnings, your survivor benefits, and your overall retirement security. So who needs to pay the most attention to all these changes? Let me break it down by category. Disability recipients. If you're on SSDI or SSI and you're working or thinking about working, those earnings limits are critical. One mistake and you could lose your benefits or face a huge overpayment you have to repay. I cannot stress this enough. Track your earnings religiously. Early retirees. If you took Social Security at 62 or 63 and you're still working, watch those earnings limits like a hawk. Going over could temporarily reduce or eliminate your checks, and you won't find out until it's too late. Low-income seniors, the COLA increase and Medicare premium hike are hitting you hardest. You're getting a tiny raise and immediately losing half of it to health care costs. This is where that legislation I'm about to tell you about becomes absolutely crucial. People still getting paper checks. If you haven't switched to electronic payments, your benefits are at risk right now. Fix this today, not tomorrow, today. Couples trying to maximize benefits. Understanding spousal benefits, survivor benefits, and the new tax deductions requires careful planning. If you get this wrong, you could be leaving thousands of dollars on the table every single year. Now, here's what I promised you. The legislation that could actually change your life, not just tweak your benefit by a few dollars. It's called the Social Security Expansion Act, and it's gaining real momentum in Congress right now. I've been working in this field for 15 years, and this is the most promising bill I've seen that could make a meaningful difference for everyday seniors and people with disabilities. Here's what it does, and I want you to pay close attention because this is genuinely exciting. First, a $2,400 annual increase for everyone. That's $200 per month, every month, permanently, not a one-time stimulus check. A permanent boost to your Social Security benefit. Think about what you could do with an extra $200 every single month. That's groceries, that's utilities, that's breathing room, that's peace of mind. Second, a minimum benefit guarantee. If you're currently receiving less than $13,500 per year in Social Security, which is about $1,125 per month, this bill would bump you up to 125% of the federal poverty level. That would put you around $20,000 per year. That's a $6,500 annual increase for the seniors who need it most. That is life-changing money. That's the difference between struggling and surviving. Third, it fixes the COLA formula. If you've been frustrated by these tiny cost of living adjustments that don't reflect your actual expenses, this bill changes how COLA is calculated. It would factor in medical expenses and prescription drug costs, the things seniors actually spend their money on instead of using a general inflation measure that doesn't capture your reality. This bill would lift millions of seniors out of poverty immediately. It would give dignity back to people who worked their entire lives and are now struggling to survive on $1,200 a month. Is it going to be easy to pass? No. It's going to take political will and pressure from voters like you, but it's already co-sponsored by members of both parties, and it's gaining traction. This isn't some pie-in-the-sky fantasy. This is real legislation with real support. So here's what you need to do right now. Step 1. If you're still getting paper checks, go to godirect.gov today and sign up for electronic payments. Not tomorrow, today. Your benefits literally depend on this. Step 2, calculate what your actual Social Security increase will be after Medicare premiums. Don't assume the COLA increase is going to help you. Do the math. Figure out your real net increase so you're not surprised when January rolls around. Step 3, if you're on disability and working, write down your earnings limits and track every dollar. Set up a simple spreadsheet or use your bank app to monitor your monthly income. This is not optional if you want to protect your benefits. Step 4, contact your congressperson and senators and ask them where they stand on the Social Security Expansion Act. Tell them you support it. Tell them you need it. Politicians respond to constituents who speak up. Your voice matters more than you think. Step 5, spread the word. Share this video with your friends, your family, anyone you know who's on Social Security or disability. Information is power, and too many people are in the dark about what's happening. Look, I know this is a lot of information to process. These changes, especially that Medicare premium increase and the disappointing COLA, can feel defeating. But here's what I want you to remember. You've paid into this system your entire working life. You've earned these benefits, and you have every right to understand how the system works, advocate for yourself, and demand better from your elected officials. The Social Security Expansion Act isn't a fantasy. It's real legislation with real support, and it could genuinely change your financial situation. But it's only going to pass if people like you make noise about it. Contact your representatives, sign petitions, make your voice heard. Things might feel uncertain right now, but you are not powerless. You took the time to watch this video, which means you're already ahead of most people. You're informed, you're prepared, and you're ready to take action. If this video helped you, please hit that like button and subscribe to the channel. Turn on notifications so you don't miss the next update. Drop a comment and let me know. Do you support the Social Security Expansion Act? Do you think Congress should prioritize it? I read every comment, and your feedback helps me figure out what content to create next. Remember, we're all in this together. Millions of Americans are navigating these same challenges, dealing with the same confusing rules and trying to make ends meet on benefits that don't stretch far enough. But you've got this. You're taking control of your future by staying informed. And I'm going to keep bringing you the information you need, explained in plain English, with no agenda except helping you get what you deserve. Take care of yourself. Take care of each other. Each